Okay. Hello, Kathy, by the way. I won't be rude and ignore you. And Glenn, if you're there too. But okay, so
Hi, Les.
how you going? I'm going to go through tonight. We're going to call this.
Not too bad. I can't see your screen at the moment.
You can't see mine. You should be able to. Can everyone else see it?
No.
Yes.
Yes.
Yeah, everybody except you, I think.
I can now.
All right. Sweet.
I got it now.
Just a delayed reaction. That's
I
all
don't know
good.
what was wrong then.
All right.
Yeah.
So this will be our third week, our third lesson, and we're going to call it market structure and trend lines. So just a quick recap. Our first week we went through, what makes the market go up and down. We went through support and resistance lines. If anybody's watching this one and haven't seen those ones and don't know what I'm talking about, let me know and we can definitely make sure you get a hold of those videos too. And then last week we went through the candlesticks. So these little red and green lines, what are they? What do they mean? And how can they help us? So we went through all of that. When I say we went through all of that, we just touched on it basically. But we went through a couple of different scenarios and what they do mean. Now, these videos that I'm recording, they're not meant to be like the go-to compendium of everything anybody ever knows about trading. So that's obviously going to be a much longer recordings and everything. I know, like one of these little lessons that we record for 15 or 20 minutes, you will find people that are offering courses and they probably want to charge you for them as well. But there might be 2 days worth of lessons, maybe 15 or 20 hours just on the one subject, just on candlesticks. Likewise, there's been many different books just written on candlesticks and nothing else, and they're nice big thick books, so there's a lot to it. So we're really only just touching on it, but hopefully it gives you an idea. I think what my aim would be, obviously, sort of to help everyone make it a decent start with their trading, but if you watch these videos, I want you to come away thinking, okay, so it's not magic. It's not just all luck. There is a bit of order to the chaos we're looking at on the charts. And if, what I've said sort of makes sense, and if I go and learn more about what Les has just started showing us, then I can see that it would definitely be possible to become a successful trader. So hopefully that's what these little videos do. Give you a good taste of it, open your eyes to the fact that it's all possible, and then you can go and track down some more expert tuition. So we're in lockdown up here, so obviously I'm coughing now just in case. Okay, I said market structure and trend lines. So when we drew, like in that first lesson, we drew a resistance line. It was a nice straight line and the market had touched on it several times. As you can see, if I draw one of those lines here now, it's only touching on it once. Maybe it touches more if I go back. No, it doesn't really. So it only touches once. So I wouldn't really personally call that resistance because it's only touched once. So there's no real indication that the market's likely to touch it again. And as we have a look, it didn't touch it and it's just continued to go down and down. So putting a resistance line there would mean nothing. So we get rid of it. What we'll do instead though, is we will get this little angled line here and we'll put it on the very tip here and we'll just draw it down. I want it to just touch that candle there. Well, that's how you would start off anyway, and draw it down there like that. And then that becomes an actual trend line. A trend line really is just like a downtrend line like this one, because it's going down, really is just a resistance line on an angle. And I probably haven't picked the very best example here because it's only touching it twice, but you can see it sort of goes close a few times as it goes down and down. I wonder if there's any better examples here. So like here we could draw, I mean, it's pretty obvious that from here, the market's just been generally going down. The market always zigzags up and down, but you can see that from the point here, the market has definitely gone down. But let's say it peaked here and then it's gone down, and then it's peaked here and then it's gone down again. Let's say everything to the right hasn't happened yet. We're just at this point here. What we could do is we could draw a trend line from there to there, and then we would extend it further to the right and down. And the idea there would be that the market's already started here, it's bounced off resistance there, and we would extend that line forward and see if it starts acting as resistance and has the market bouncing off it all the way down. So we would just draw that line. And you don't always get it exactly right the first time. As you can see where I originally had it, it didn't quite touch there. But now we can see that the market sort of bounce, 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 bounce. So this has become quite a strong trend line. And it's simply the same as resistance because it's above the market and it's bouncing off it and bouncing back down again. So that's all a trend line is. It's, as I said, it's just resistance or support. You know, if we had an uptrend going on like we do here, and you know, you can see that even though the market, before I drew these lines, the market was zigzagging all over the place, and now we can see that it's, you know, whenever it's hit where this line is, it's just bouncing on it. So although the market's all over the place, wherever the market dips down, dips down, dips down, it's all in a perfectly straight line. So that's forming the upward trend line. And because that's underneath the line's underneath the market, it's exactly the same as support. So every time the market gets to it, it's bouncing upwards. Downward trend line, same as resistance. When it hits it, it bounces downwards. So does that make sense? It's just support and resistance on an angle. Is that how you would look at it, Jan?
Yes.
Yeah. Jan's
Yeah.
done some more serious trading courses herself as well, so I'm glad she agrees with me. Okay, so let me just get rid of these couple of lines. All right, so that's what trend lines are, and I was going to title this video Market Structure and Trend Lines. So what do I mean by market structure? Well, I really just mean, to me, what market structure is mostly is just, is the market in an uptrend, or is the market in a downtrend, or is it just going sideways? Just sideways is quite often just called consolidation as well. And if you remember back to our support and resistance lesson, we had a support line and a resistance line, and the market was just bouncing between the two, just moving sideways. So that was just consolidating. But because support and resistance were a fair way apart, we were able to trade, do short orders off the top, long orders off the bottom, and just trade up and down all the way along between support and resistance. So when the market's moving sideways, that's still good. If the market's moving upwards, we generally just look to do long orders or buy orders. So we look to place trades so that we make profit as the market goes up. So if we can identify that the market is in an uptrend, we preferably don't look. So if we use this one for, let me just draw some pictures just to explain something else first. So what we have here is a low point in the market. Okay, obvious, it's just come down and it's turned upwards, so that's a low point. And it's sort of gone up a bit and it's come down again. And because it's pretty much the same level as this one, I'm just going to call that another low point. Now, where are some more low points? We can see the market's gone up and then it's come down again. So there's another low point. It's gone up and it's come down again. So there's another low point. But what I would call these low points are lower up. That's not what I call them. I call them,
Higher
H-
low.
yes, thank you, higher lows. So it's still a low point in the structure, in the way the market's moving, because it's gone from high, it's come down. So it's a low point, but it's higher than the most recent low point over here. And obviously the same as this one. Another higher low. And the market's come up and it's come down again. So right about there, we could probably call that another higher low. Sometimes when the market's not zigging and zagging quite as much as this, it can be a little bit not as obvious where the highs and the lows are, but here it's pretty obvious. So we can see why I've got that. And what we've got on the top side as well is a high point. And then up here, we have another high point. And what are we going to call this one? A higher high. We don't want to be too technical. And right up the top here, I guess we better label that one too. All right, so I think it's pretty obvious how and why I've labelled them as they are. And this is how we like to precisely define the fact that we are in an uptrend. So the markets, we can see, hide that a little bit. We can see the market's in a downtrend, or the market's been moving down, and it's hit here, and then it's come up and it's come back down again. So because this, just let me put a couple more labels in because I like drawing pictures. Okay, this will explain it better. Let's say this is the market trending downwards. We've got a lower low, we've got a lower low. Just imagine further this way, there's a lower low, a lower low, a lower low, a lower low, and now all of a sudden it's a low, but it's not a lower low. So it's just a low. So all of a sudden something's changed. Instead of getting lower lows all the time, now we've just got a low. It's just even. So that would be our first indication that something's changing, that the market stopped going down. It doesn't necessarily mean that downtrend's over, and it definitely doesn't mean that an uptrend's starting, but something, you'd prick your ears up, you'd start to take notice because something could definitely be changing. And then, so right here, I've got to label this one. That one would be a high. So I better call that one a higher high. All right, so we've got the lower low, and then all of a sudden we've just got a similar leveled low. Then the market's come up and it's peaked here. And that's a higher high. It's higher than this high point here. So all of a sudden, and what we would have coming down here, we'd have a lower high, a lower high, a lower high. This would be a lower high. And then all of a sudden we've stopped getting lower lows and we've started getting higher highs instead. So now it's starting to look like we might, that's sort of when we reach this point here and we get a new higher high. Now the downtrend is over. It's not going down anymore because it's just started, it's come back up a little bit. But we don't know whether it's really an uptrend yet. It's come up a little bit, but is it a trend? I wouldn't say so yet. Then as the market comes down here and it dips there and then goes up, we've formed a higher low. As soon as that happens, that's when I'm willing to call this an uptrend because we've had a higher high and a higher low. So now that is what I would call an uptrend. So as the market came down here, I'd be looking for short orders or sell orders so that I would make profit as the market moved down. When this lower low, when this even low happened, I'd go, hang on, it's not doing what I was hoping anymore. I wouldn't be doing any trades at all here now because I don't know what's happening. It looks like my downtrend may have stopped. So I'm going to stop trading and see what happens. Then when the market did a higher high and a higher low, now that's telling me it's in an uptrend. So now I'm thinking, okay, I'm going to look for good opportunities to do long orders or buy orders so that I make profit as the market goes up. And, you know, like say, if that happened here, maybe I'd place a buy order here, take profit up here. Then as the market dips here, or what they call retrace, it just retraces a bit. Then I'd be looking for an indication of the market bouncing here somewhere. Like I don't know how far down this way it's going to come, but I'd be looking at the candles to give me an indication that something, you know, that it had stopped going down and was going to go back up. And then I'd be looking for buy orders again. So that's the main use for, I mean, as I was saying, it doesn't matter if the market's going sideways, you can make money. If it's going up, you can make money. If it's going down, you can make money. Obviously, the trick is being able to know what the market is doing. Otherwise, it'd be too easy, wouldn't it? But so that's, and this would be the main way that probably the most common, most used facet of trading that I use. Just looking at market structure. When I've got trades in play, I'll look, and if it looks like the market's changing and going against me, you know, I might close that trade, take that loss because I'm protecting myself from taking a bigger loss. So that's still really a win. And then if I had a buy order here, a long order to make profit as it goes up, you know, and I can see that, yes, it's in an uptrend. So I'll just let that trade keep running because it's in an uptrend. I can keep making more and more on it. And then I'd just be keeping a close eye for when the market changes direction again, which obviously is what happens just here because we get a low, we get a lower high and a lower low. So yeah, now we're in a downtrend. And that's not really any different. And then if you connect all the, you know, the low points together, that's how you get the trend line. The reason I wanted to talk about the lower lows and the higher highs and all of that is because this brush, let's say the market didn't do exactly what we're looking at on the chart there. Let's say it formed this lower low and then, you know, it came up here, formed this higher high, and then it might have formed a higher low, and then it might have just went to there and then came down to here and then come up to here. Okay, so it's still sort of going upwards, or it started to go sideways a bit, or from here it might have went up to there and then down to there. So we've got a higher high, a lower high, and then a higher high. That's not a real solid uptrend because, I mean, it's still trending upwards, but if you're looking to place a trade or place some trades based off the fact that you're in a strong uptrend, you want every high point to become higher high, higher high. That way it's really solid. You can sort of rely on it a lot more. If it's going to do a higher high and then the next one's going to be a lower high and then a higher high after that, you know, what's this market doing? You can't be 100% certain whether that uptrend is going to continue, or if it is, how high it's going to go before the retracement. So it would be a lot harder to place a trade reliably. Any questions on what I've said so far, guys? Gee whiz, I must be good at teaching this stuff.
No, it's good. Good explanations, Les.
No questions. Particularly you guys that have do manual trading or have done courses. I would definitely like to get your input as well. For starters, how do you get rid of that line? Doesn't
No,
matter.
I think you've done well, Les, explaining higher highs and higher lows. And
Yeah, so what we will do, once I've gone through the basic things like we have been the last few weeks, I will tie them all together and show you how we can use all of them in conjunction with each other and different ways that we can use that information to place profitable trades, basically. But trying to keep each video simple and short, that won't be tonight. So, seeing I'm such a good educator, do you all, particularly those that haven't done much trading, can you easily understand and distinguish exactly why and how this downtrend stopped and became an uptrend, and likewise here and became a downtrend? So do you think if you were watching this happen live, you could probably say, whoops, downtrend stopped, uptrend started? You could probably work that out for yourselves.
mhm,
I'm expecting 3 yeses here.
yes,
Thank you. All right, that's good.
Yes.
Now, that's really all I was going to go through tonight, but a couple of little things I do want to show, because it may, it should do, hopefully it does blow your minds a little bit, because it did mine, and it did Jan's. Diane's just ahead of us anyway, so it probably didn't blow her mind, but
vaccinate as many people as possible.
so we're talking about all of this in relation to actual trading. But because we're talking about crypto at the moment, I mean, everything I've taught so far, it can be used on crypto, Forex, oil, gold, indices, et cetera, et cetera, et cetera. It's all of these bits of technical analysis can be used on any sort of trading, even binary options. But it can also be used if you just want to hold crypto, if you want to buy crypto and hold crypto. So if you're just a hodler, which simply means you buy some crypto and you hold it because you believe it's going to be worth more in the future. And, preferably you want to, obviously buy it when it's cheap, and maybe wouldn't it be great to know exactly when it all peaks so that you could sell it all then and then buy it all back later when it was half price again. That's sort of the holder's dream, they call it hodling, but the holder's dream is to obviously buy it cheap and sell it when it's dear. It's pretty obvious. But what tends to happen, not just with crypto, but with a lot of things, is when crypto, Bitcoin, etc., is going up in value, more and more people start hearing about it. It's on the TV when you watch the news, it's on the radio in your car. They're talking about it, everyone's talking about it. Obviously, Elon Musk is talking about it. Everybody's talking about it. So, like, start of 2017, I didn't know. I really hadn't heard of crypto. I might have heard of it, but I knew absolutely nothing about it. No one I knew anything about crypto or Bitcoin. By the end of 2017, everybody was talking about it. Why? Because it had gone up in value so much, so fast, what they call a bull run, that it was making the headlines in mainstream news and media, TV, radios, etc. So everybody was hearing about it. When that happens, it's happening because it's going up and up in value. Some people have made a whole heap of money, say that it's exciting, etc., etc. But it tends to go past excitement and into the hype phase. Nobody wants to believe that it's going to start to go down in value because everyone's talking about it, telling you how good it is, patting themselves on the back because they bought it cheap and it's gone up in value. So they start to tell their own hype stories, expecting it's just going to go up and up and up and up forever. And that's why I used 2017 as an example, because in December 2017, Bitcoin reached a peak of just over $20,000 per coin. What was happening in people's minds at that stage? They were all buying into this hype. They were just buying Bitcoin. They were bloody mortgaging their house. They were selling their grandchildren to get some money together to buy Bitcoin. at 20,000 US dollars. And then over the course of the next 6 months, that's Bitcoin went back down to about $3,000. So, you know, for the first few months when that happened, it was on the news talking about how terrible it was, and then it just disappeared. You didn't hear anything about it again until earlier this year. Now, a lot of people that bought their crypto at the end of 2017, they sold it cheap at the bottom at $3,000 and you know, just put it up to a loss. Other people hung on because they didn't want to take that loss, just praying that it was going to go up again. But it took 3 years, but it did start to go up again. And I could probably bring up a chart to look at this. Let me just type one in here. And this is a bit of a sad story, really, though. But this is what happens when you just believe every bit of hype and everything that you hear. So I can clean up my chart. But anyway, so earlier this year, Bitcoin started going up. Like it was sort of down to 3,000. We got up to 10,000 last year, and it sort of hung around that value up and down a bit for quite a while. Some people at that stage at $10,000, they thought, well, it's better than where it was $3,000. I better sell my Bitcoin now. Even though I bought it at 20, I'll sell it at 10. So I've only lost half my money, and probably thinking, at least I got a bit back. Then they watched it go up to $15,000, $16,000. Right about there, the majority of people, the vast majority of people that bought Bitcoin at $20,000 sold their Bitcoin because they thought, I've almost got my money back now. I just couldn't bear to see it go down again. And they maybe see a couple of articles that say that crypto is going to go down. So they just can't take the risk anymore. They've been looking at a loss for 3 years. They just can't handle that anymore. So they sell it. 2 months later, Bitcoin was at 60,000 US dollars. And obviously we know how those people felt. So yeah, that's just the story. That's just how people sort of think about it because they buy into the hype. They get scared when they're losing money, get too excited when they're making money. And instead of actually trying to find out exactly what's going on, which we can do with these charts.
And now for Check of the Markets, here's Network Finance Editor, Gemma Langton.
Let me just get back here. That should be about it there.
We closed out the financial year at 7,313.
Now, this is a peak at the end of 2017 when crypto got up to, I'm pretty sure it did just make 20,000, but it doesn't quite look like it there. But this is what the chart looks like. Now let's have a look. What we just talked about earlier. Lower low, higher high, higher low, higher high, higher low. Let's just have a look here. Higher low, higher high.
Tomorrow, correspondent Sarah Green, 44.
Higher high, maybe a higher low there. Now we've got a higher high. Remember, this is where our higher low was. Oops. Look what's just happened. We went from a higher low, higher high, and now we've got a lower low. Okay, so what's that telling us? That's telling us that the uptrend has stopped. The uptrend has stopped. But then the market comes back up a little bit. It's still, over $3,500 off the peak here, but then it turns around again. That's a lower high. Okay, so now we know for a fact that the uptrend's over. I mean, it could start again, but right about here, you wouldn't be buying crypto. Now, I didn't know this in 2017. I was bought into the hype as well, you know, and it's going up. It's just going to keep going up. It's going to go up forever. But if we could just know that market structure, the higher lows, high highs, higher lows, and then all of a sudden that's changed. If you bought Bitcoin here, you know, you're going to take a bit of a loss. You can't help it because you've bought it right at the peak. So people that were in the know, they probably bought their Bitcoin earlier anyway. But when they saw this happening, ooh, they started to pay close attention. And then when we got a lower high, they go, oops, that's where the people that knew what they were doing sold all their Bitcoin. They sold it at a huge profit. While all of us mere mortals, we're still buying into the hype and we're going, all right, it's all right, that's just a retracement and it's going up again now, quick. What else can we sell to buy Bitcoin? So I couldn't give you the figures, but there was, you can have a look at the volume, actually we could, but right about here, there was a lot of people bought Bitcoin because this was just all good news, big hype. Okay, no, that big drop there didn't even scare anyone. There was no scary news reports or anything, and it started coming back straight away. People just kept buying Bitcoin, and you know they got excited because it went up a bit more again. Formed a higher high there, but we already know that the uptrend's over, and we're just waiting to see what's happening. Is it just going to consolidate and then keep going up, or is the downtrend going to start? Okay, now we've got an even lower low. So now we're really thinking there could be a downtrend coming. And boy, was there. That downtrend went on for 2 years or more.
Mm.
See, it stuck around that $6,000 for a long time. And then it took a really big, and we'll look at this on the next lesson because we're going to look at some continuation patterns and reversal pattern type things as well. But the very fact that these zigzags are getting smaller and smaller and smaller tells us something very important. When we see the market zigzagging like this, and you know, so if we can see, if I drew a line there, what do you reckon that line would be called? If we have a look here, the market's bounced off it, bounced off it, bounced off it, bounced. Okay, so we've got a very, very strong support line there around about that $6,000 mark. And we're talking from June 2018, or even more probably, but early 2018, basically a year, the market was bouncing off $6,000. Meanwhile, we've got the high points are getting lower and lower. So we could draw a trend line on them. Let's just do that, for example. And we'll get this stuff out of the way. So we've got strong support there, and we've also got a trend line. And the market's just bouncing between them. Ping, 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 bounce, 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 bounce. Now, without taking all the wind out of next week's lesson, when we see this formation happening, the most likely thing to happen, Jan, is we've got a downward triangle forming.
Yeah. Yeah, it's got to break out one way or the other, hasn't it?
It will
Probably
break out
down.
whenever the market's getting into an apex of a triangle, it's going to break out one way or the other. And when it does, it generally does so significantly. In a downward triangle, the most likely case scenario is it will break to the bottom. It doesn't always, but you know, if you wanted to play the odds, most of the time it will break to the bottom. As traders, we wait for the break and then trade. But you know, it's been on $6,000. Everybody's thinking it's never ever going to go lower than that, except people that can read the charts. And bang, as I said, when it breaks out, it does so significantly. And this is where it's gone right down to nearly $3,000. A lot of people crying about this stage. Okay, so really all I wanted to show was that if you knew market structure and you could recognise that the market structure had changed here, I could have made a hell of a lot more money than I did, put it that way. I was just lucky I got a lot of Bitcoin right down here, so I was still good. But, you know, just being able to recognise when the market structure changes can either make you a fortune or save you a fortune.
Yeah.
So let's just jump forward to more recent times. Okay, and we've gone up to nearly 6,000. We're just looking at the same thing. Look, we've got a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Oops, what's happened? Got a higher low. Now we've got a lower low. For the
Just a
first
low,
time
yeah.
in many, many months, we haven't had a higher low. We've got a lower low. So our uptrend is over. Exactly what happened at the end of 2017. So it's no surprise what's happened and what is happening now, sort of thing. We still don't know how far down it will go. I don't personally think it'll go anywhere near as low as it did before, but the point is now all of us here now on this call, we recognise that was the peak, and then that uptrend was over, and now we're in a downtrend. Right about here, we knew we were in a downtrend. See what happens, make decisions based off that. Not buying more and more Bitcoin here, buy a heap more here because we're buying into the hype. We've read the charts and we know that the uptrend's over. Maybe not for very long, but for the moment, the uptrend's over. So let's just sit back and see what happens for a while and not rush into any silly decisions. So when the first time I was shown that, which they were using the 2017 example, I thought, my God, how much do I wish I knew that much back then?
Yeah.
And that's not even, you know, that's lesson 3 from a guy that's not a trading expert. So, and I knew none of that in 2017. So if something so basic to trading is can make such a huge difference, then you wait till you start seeing some of the more exciting stuff. Any quick questions on that before I stop my recording?
Not so sure about that. Last week's group of
We
players
need more novice traders on these calls so they can ask questions. But anyway.